Welcome back. Well, the International Monetary Fund has agreed to pay out a $320 million second tranche of Tunisia's loan program after talks to agree on the government's reform priorities. The portion of the $2.8 billion loan program was delayed from December because of a lack of progress in reforms to cut public spending and overhaul state finances demanded by Tunisia's multilateral lenders. The International Monetary Fund and the Tunisian authorities reached a staff-level agreement on the policies needed to complete the first review of Tunisia's extended fund facility. The IMF noted that Tunisia's economy faces significant challenges and that the difficult economic situation requires strong and urgent action to maintain macroeconomic stability and boost job creation. The IMF team welcomes the determination of the National Unity Government to act swiftly, guided by priorities of the Accord de Carthage and the 5-year development plan. According to the fund, the policies supported by the EFF are helping to translate the authorities' agenda into specific actions. And oil prices fell in faint trade today after the Easter holiday break shut many markets for as long as 4 days, and as U.S. government report indicated rising production. Benchmark Brent crude futures were down 9 cents at $55.25. U.S. West Texas Intermediate crude futures were also down 9 cents at $52.56 a barrel. Now, what is global oil outlook as U.S. production rises? Let's talk to a research analyst at financial derivatives company, Desola Sumoni, for details. Good afternoon, Desola. Thank you very much for joining us.
Good afternoon, Chimel.
Now, should the U.S. oil production increase be a major concern for OPEC at this time?
Yes, as a matter of fact, it's like you rightly said. Data from the Energy Information Administration show that U.S. oil production has increased to 9.24 million barrels a day, which makes it the third largest oil producer in the world after Russia and Saudi Arabia. Also, U.S. oil rig count has increased for the 13th consecutive week to 638 rigs. And this is the highest in 2 years. So we can see that there's a lot of oil activity in the U.S. and this is kind of creating a cap or an invisible ceiling for oil prices. And I think OPEC should be concerned about that.
Now, what would any increase in output in the United States mean for OPEC members as a group and its members like Nigeria?
Okay, as we've seen since the OPEC deal in November 2016, that increases in U.S. production and crude stockpile always causes a downward effect on crude oil prices. Like you rightly said, oil prices are down today because of increase in U.S. crude stockpiles and U.S. production. As I said earlier, it is kind of creating a ceiling, an invisible ceiling. Like oil, it is capping the effects, or is containing the effect of the OPEC and the non-OPEC deal, and it is just limiting how far or how high oil prices can go.
Now, OPEC is due to meet on May 25. Aside from the issue of an extension of output cuts beyond June, what other issues will form the discourse?
In my opinion, OPEC, the extension is the elephant in the room. That's the major agenda on the table. That's what they will be discussing, whether or not they should extend the production cut. And comments from the Iraqi oil minister over the weekend suggested that there's an increased likelihood that they would extend the cuts, although we do not expect that there will be further cuts, like more countries will be expected to cut in their production more, but we think that this current production would be extended because global crude stockpiles and global inventories are still very high, and they're higher than the 5-year average. So we still expect that will be the major agenda, and that we think that there will be an extension in the production deal.
Now, just a quick one before I let you go. With the rise in U.S. oil output, what is the outlook for oil prices?
I think that oil prices would not rise above a certain threshold. I think that so far we've seen the highest this year. Yesterday high is about $56 per barrel, or in intraday about 57. But you think that with the U.S. stockpile, and U.S. being the third largest oil producer now, I think that oil will just trade within the range of $50 to $55 per barrel for the coming weeks.
All right, thank you very much for your time, Desola Simoni, research analyst at Financial Derivatives Company. Now, because of the traction Africa gained last year, especially in the hotel, residential and commercial sectors, its rapidly growing property markets are attracting increased interest from international investors, developers and occupiers. Yet areas experts see continually strapped to the backbench is the financial planning, project execution, and more importantly, the implementation of sustainable measures that will further attract foreign investments to Africa's tourism and luxury real estate sector. Now, these issues are being discussed at the 10th edition Hotelier Summit Africa taking place in Johannesburg, South Africa, and Nigeria is also represented at that summit. And let's talk to one of the Nigerian delegates there, the CEO of Sojimoto Construction, Shijubumi Ogundele. Good afternoon, Mr. Ogundele. Thank you very much for joining us.
Yeah, good afternoon. Good afternoon. Thank you for having me.
Now, of what significance is it really that these stakeholders at the Hotelier Summit will be discussing Africa's real estate industry?
When you look at the whole event, it's a proof and it's a convergence of evidence that African real estate is the next frontier. If you understand the dynamics of foreign investors when it comes to solid projects, there's been a shift in paradigm of these investors. Between 2005 and 2015, an extreme focus has been on the BRIC nations. This is Brazil, Russia, India, and China. But when you look at their appetite now, they've realized that looking at a great ROI, Africa will be the next focus. I haven't even said that. It has been recently proven that people in Nigeria between the ages of 40 to 65, they have chosen real estate as the safest and most preferable retirement plan when it comes to investment. So all this put together is a recognition that the Nigerian real estate industry has an exceptional potential, and even with all the recession and everything going on, we still have an exceptional, an incredible opportunity for real estate in Nigeria and basically in Africa.
Mr. Ogundele, just before I let you go, a quick one. I can see you are a firm believer that luxury is not expensive. Now, in a country in a recession such as Nigeria and within the wider Africa front, where political issues tamper with the economy and investment class choices, how much support or faith do you think investors can demonstrate in luxury real estate as an investment class?
Luxury, one of the reasons why these people invited me to speak among industry leaders is because there is a synergy in what stands for Sojimoto Construction and what they represent. I always say luxury is not expensive. It is the intention and the dedication in the creation of luxury that's expensive. The Nigerian recession or no recession, people have matured in their spending habits. They will tell you, yes, we will buy from you, but they have started demanding value for their money. And if you look at the three pillars of what we... Sorry?
Well, Mr. Ogundele, I may just have to cut you short there, but I hope to see you here in the studio by the time you come back from this summit so that we can really talk more on this particular issue. Our time is actually running against us. Thank you very much for your time. Well, that's it on the program. Thank you very much for watching. I'm Chimize Obi Iwagu.